This is the hold report for Monday, January 26, 2026. Donald Trump is melting. The S&P 500 reached a new all-time high today, rising 0.5% to 6,950.23. Simultaneously, the U.S. dollar fell to a nearly four-year low against a basket of foreign currencies. This is a classic melt-up. Equities are rising in nominal terms as investors seek to hedge against the debasement of the underlying currency. The flight to hard assets was evident across the board. Gold surpassed $5,100 per ounce, setting a new record. Silver surged 14% in a single session before settling. Bitcoin and other non-sovereign assets are bidding higher as liquidity seeks exits from the greenback. The market is pricing in a regime of sustained dollar weakness, using equities and commodities as a store of value. Meanwhile, capital flows are aggressively favoring sectors aligned with the new administration's industrial and geopolitical priorities. USA Rare Earth rallied 7.9% after securing a $1.3 billion federal loan and $277 million in grants. The administration's focus on domestic supply chain security is effectively acting as a state guarantee for the sector. In AI infrastructure, CoreWeave climbed 5.7% on news of billions in funding for AI factories. The push for AI nationalism is driving capital into physical infrastructure providers. In energy news, Baker Hughes rose 4.4% on strong LNG demand. As global energy trade routes fracture, evidenced by Russia docking ice-class tankers at sanctioned plants and Canada pivoting energy exports to India, infrastructure providers are capturing the premium. While industrial sectors thrive on state support, the consumer economy is showing signs of fracture. Fat brands, Fatburger Johnny Rockets, filed for bankruptcy today, joining a growing list of casual dining chains seeking protection. Persistent inflation continues to erode discretionary spending power. The health insurance sector sold off as the anticipated regulatory tailwinds from the election failed to materialize. The government-backed growth thesis for insurers has stalled. In smart money news, Apollo Global Management recorded a total write-off on a $170 million loan to an Amazon aggregator, a signal that distress is beginning to penetrate the private credit markets previously considered resilient. The administration's use of tariffs as a primary diplomatic tool is accelerating the formation of alternative trade blocs. Nearly all of the economic blowback arrives at the doorstep of the American people who don't fly first class. But Donald John keeps at it. He threatened 25% tariffs on South Korea today, and tensions with Ottawa have escalated to the point where Canadian travelers are boycotting U.S. destinations. Canada and India pledged today to expand oil and gas trade, diversifying supply chains away from the U.S. In a significant rebuff to U.S. protectionism, the EU and India concluded a free trade agreement after 20 years of negotiations. The global trade architecture is reorganizing around the U.S. rather than through it. Domestic stability remains a key variable for market risk. In Minneapolis, Greg Bovino, the Border Patrol commander leading the immigration crackdown, is departing the city following public outcry over the deaths of 2 U.S. citizens during federal operations. A potential shutdown looms as congressional Republicans fracture over DHS funding, and the Treasury Department canceled $21 million in contracts with Booz Allen Hamilton, citing data protection failures regarding Donald John's tax returns. This signals a stricter compliance environment for federal contractors. The data indicates a structural shift in valuation metrics. Donald John Trump's trade policy has been a splash of cold water in his sizzling face. High stock prices and record gold values are communicating the same message. The market demands a premium to hold U.S. dollars. Investors continue to rotate out of cash and into any asset that can maintain purchasing power in a hostile environment.